Hey, I'm Matthew Ma, the host of the Truth About Real Estate podcast, and today we are talking with Ruben Izgelov of WeLend. With over a decade of real estate investing, acquiring industry, with over a decade in the real estate industry, acquiring, flipping, developing, and financing over $500 million worth in real estate, Ruben has quickly become a renowned real estate expert, speaker, and guide for many professionals in the industry. After the financial crisis in 2008, he quickly saw the innovation desperately needed in the private lending space and decided to spearhead it by co-founding WeLend LLC, a private lending platform. Welcome to the show, Ruben. Excited to have you here.
Thank you so much for having me, Matthew. It's a pleasure.
Cool. Before we hopped on the podcast, just talking to you a little about real estate, but I really wanted to know, when did you start real estate, and how did you get started in fixing and flipping homes?
Yeah, so for me, it was all about the American dream. I mean, we came to the United States of America when I was probably around 6 years old in the early '90s. I know I look a lot older than that, but in the early '90s, 6 years old, went straight into the Department of Education system. One of my cousins actually he started doing real estate at that time. Well, a little shortly after, he was door knocking from door to door for physically and financially distressed properties. And then one day asked that I was right around 13, 14 years old, asked that I actually go with him door knocking because it's easier to get, a door open for a 13-year-old than it is for a 40-year-old. And I did that. We did that over the summer. Went door knocking from one door to another. Saw him, with his pitch, saw what he was doing, going to the office with him, going to meetings to attorneys with him, and so on, and just kind of getting engulfed into the space at such an early age. Kind of left a nice stamp on me as far as what I want to do when I get older. Fast
Wow.
forward.
Starting
Yeah,
at that age, that's actually really smart of him to help and to show you what's going on in the business industry, the real estate industry, and jump in, and he's actually smart because he thought of it is way easier to open a door with 13-year-old and
oh,
yourself.
absolutely.
Yeah. Hey, we should
People
start
are
doing
opening the
that.
door thinking that, right? I mean, get a bunch of 13-year-olds, go to a junior high school and see what you can recruit. But nevertheless, I mean, it was wise of him, because guess what? People were thinking I was lost. People thought I needed help, and they were opening the door, and all of a sudden he would pop up and say, "Hey, look, I know your property's in distress. I'm looking to buy all cash, what have you." And seeing what he was doing, seeing the kind of money he was making, it literally left this great taste in my mouth, where I was like, all right, this is something that I have to do. Fast forward a few years later, decided to drop out of high school foolishly. Thought, I don't need the education. Thought that I'm a lot smarter than the other students in school. Went straight into loan originations, similar to you. I was a mortgage loan officer during the Wild Wild West, and then the market crashed. And I was sitting there with my father one day, and he's just like, well, "What are you doing now, right? I mean, you were doing well for yourself. You're 16, 17 years old, making a boatload of money, and now you're sitting here crying." And he had me give him a man's word that I was going to go back to school, which I did. Went, got my GED, ended up getting my bachelor's, and then ultimately going to law school. Congratulate me. Yesterday, I was just admitted to practice law in the state of New York.
Congrats.
So
Wow.
after
Yeah.
many years later, we achieved that milestone, which is huge. But during the time of undergrad and during the time of law school, I was buying, selling, flipping, developing real estate here in New York City, and very, very grateful for the opportunities because it made me the man that I am today.
Nice. Let's talk about that. Let's go back here. When you started doing door knocking, and you're working with your uncle, right? You said
Yeah, my cousin,
your cousin. So, what was the mindset of that? Like when you're door knocking, isn't it scary, especially as a 13-year-old? Aren't you scared that you're knocking on someone's door and they're like, "Who's this?" Like they're gonna come out and hurt you, or come out with a gun, come out and say
you
something?
know, Now that I look back at it, yes, because
Yeah.
I didn't know what neighborhoods I was in, and they weren't in the best of neighborhoods.
Yeah.
I didn't understand the risks that were involved in it. But now that I look back, I'm like, look, I can't believe this is what I was doing. But thankfully, everything turned out well. Not only for me, but for my cousin as well, because I know just from my door knock, and he closed multiple deals from that. So turned out well for the both of us.
And isn't it amazing? Because I want to talk about this too. Isn't it amazing that by knocking on these doors, you're actually creating opportunity? You're actually finding people who need help. Not
Yeah,
everyone needs help. Not everyone wants you to be there, and not, some people want you to go away. But the
yeah.
point being is that if you knock 100 doors, you might find that 1 to 5 people who actually want and need help, and you're being in front of them, helping them solve a problem that they have.
Absolutely. And, a lot of people don't really understand that part of it, right? People think that if you're looking to buy properties that are in, physical or financial distress, you're a bottom feeder. You're a person who's, taking advantage of people's distress or what have you. Look, I look at it from a different perspective. These people did not have, options. They didn't know what was happening. They didn't know what to do. They may have had a number of violations on the property. They didn't know how to resolve them. They may have had a foreclosure on the property. They didn't know that they can do a short sale. They had, a number of other issues. For example, tenants not paying and they couldn't evict. You as an investor, as a professional or a real estate agent are coming in and helping them and guiding them through that process, introducing them to the right parties, whether it's, an architect, whether it's an attorney, whether it's a mortgage banker or what have you, to provide them the solutions that they didn't know exist. So I think it's not only, a value add for you as an investor or a real estate agent or a professional, but it's also a value add to the seller or the person in distress.
Yeah, and I agree with you. I think it's a lot of hard work and it's really good for the people who can do it, and it's tough doing it, but you really have the option to provide value. I know there's some people out there who just, try to get the really best deal for themselves as an investor. I completely understand that. And there's people out there who actually want to help people and, make it fair for them because the house is really dilapidated and needs a
Yeah,
lot of work, and investors
yeah,
are taking risks, but they're just asking and giving them options to choose from. And if they
yeah,
like that, then that's great. So I'm sure
absolutely.
during that time period, you mentioned too, your cousin and yourself helped a lot of people,
Yeah,
with the properties, right? And how
yeah,
did they feel
absolutely.
after they sold the property to you guys?
Each and every one of them was grateful. We unfortunately didn't buy each and every property. I mean, there
Mhm.
were some times where we just helped the person in their issues, right? We connected them with an attorney to help with the eviction. We helped them, by connecting them with an architect or an expediter to help them with their violations. There was a number of property managers to help them manage the properties. We didn't get compensated for that. It was just a matter of goodwill of helping the other person because guess what? Whatever goes around comes around. So, you try to do as much good as you can so that good comes right back to you.
Yeah, that makes sense too. And I'm sure when they feel happy and helped, the neighborhood, everyone, they might see other friends and family and say, "Hey, actually, these are great guys who are helping me." And then they moved on to the next thing, and then you may have met some other neighbors too, and they're interested in selling as well.
Yeah,
Build
you won't
relationships.
believe it. I mean, just a few weeks ago, I got a call from a niece of one of the sellers to a property here in Brooklyn. She reached out, said, "Look, you did really good by my aunt. She was very, very happy with you, and we're looking to sell the property today." It was a multifamily property here in Brooklyn, and guess what? Like I said, whenever you do good for someone, somehow, some way, it comes right back to you. And that was we bought that property and we transacted with her aunt. I think a little under 10 years ago. So,
Mm.
you never know when you're going to get that call. So make sure you keep that number the same and don't change it.
Absolutely right. That makes sense, and that's good that you can tell the service level too. If they're calling you 10 years later, then
Yeah,
it really means something. Then at that point. So
exactly.
you guys are doing something
Exactly.
right, and that's good. Tell us about this too. Like when you guys started doing, fix and flips, like what's your first time you guys did it, and like how did that go?
Yeah, so when we started with very little, as far as dry powder or finances or capital. I mean, we had to kind of start from the bottom, right? It was the ultimate American dream. I'm always proud to say this. I mean, we started with 6,000 in our bank account and 6 months behind on our rent. Not many people know this. I guess after this podcast, many will.
Yeah.
But we were able to build the wealth and the capital and the war chest to be able to start buying and flipping and developing ourselves. But the way in which we did that was by wholesaling properties, right? We used to find properties, and be able to lock them in at a contract or be able to help the seller in some fashion and form and be able to wholesale it to another investor who would actually go ahead and buy the property, fix it up and flip it. And that enabled us to build a capital that we needed to be able to grow our small empire that we hold today. And forever grateful for that.
Isn't it amazing too, like how, okay, you take a look at this too, like okay, wholesalers and people who are trying to get into the industry, they started to find deals, like they door knocked, they found deals, they couldn't buy it themselves, so they wholesale it to someone else. But those people actually actively look for other investors who are interested in fixing and flipping too, and then they
Yeah.
wholesale a deal to them. Both
Yeah.
sides make some money, both people sell, seller gets paid, you get paid as a finder, for example, they get paid as a wholesaler, and then the next person who buys it as a fix and flip. So multiple people are getting paid. You're actually creating job
Absolutely.
opportunities there too.
And you exactly, and you as a wholesaler, we're the foundation to all of that, right? It's you help not only the seller, you help the local community, you help the buyer, the investor, you help the ultimate end user and their families, and and potentially even helping the end user build generational wealth through it. So there's a lot of benefits that you as a wholesaler and investor are generating through your investments and your hard work.
So in wholesaling too, like in wholesaling, there takes a lot of work, like a lot of grinding too, because you're having to, dial, like really, literally door knock, dial for dollars, and like circle prospect in neighborhoods, and like really find those needles in the haystack, those properties who want to sell. Isn't that?
Yeah.
Don't you think that's really a lot of work and really tough to do?
It's all a numbers game. I always tell that to each and every one of my investors. Sometimes we speak to our borrowers and they're like, look, I just can't find enough deals. I mean, what do you recommend? What do you suggest I do? What am I doing wrong? And I tell them, look, it's all a numbers game. When we were in the fix and flip space ourselves, buying, selling, flipping, developing, I mean, I used to make well over a dozen offers on a daily basis on properties. And not all of them. I wish each and every one of them panned out, but I would say a good 85, 95% of them did not work out. But all you really need is that 5 to 15% on an annual basis to work out. And that's exactly what the numbers are. It's all a numbers game. You got to do as much work as you can in the beginning. You got to make as many offers as you can. You got to be able to see as many properties as you can to be able to go out there and potentially get that 5 or 15% come back to you within some period of time, so that you can actually buy, flip, and develop that property.
Yeah, that's pretty interesting because when I look at that, and I look at real estate sales, real estate agents, like, you teach them everything in real estate sales business is all about like process, systems, hitting your
Yeah.
numbers and being diligent and doing the work and being a numbers game. If you can do that quantity and get the right activity and learn how to convert better and learn how to market better and then build the influence on around it, then you can
Yeah.
succeed. But that's really hard because it's so much to do. And like you're looking at, hey, I need to learn about financing, marketing, business, strategy, and everything else on top of it, right? And doing the calls
Look,
and door
it
knocking.
is. It sounds like it's a lot. It looks like it's a lot, and truth be told, it is a lot. But if you treat it as a full-time business, then you'll do well. And look, the first 2 or 3 years of being in the business, I can attest to the fact that it wasn't easy. I had really bad times. I had a donut on my car and I couldn't fix it. It was bad. But if you're able to manage that and be able to withstand the hard times, then you will reap the benefits in the future. And it's the hard work. Look, I'll be honest with you. I was working from 7 to 9 p.m., 7 a.m. in the morning to 9 p.m. Right, and that hard work, practically 7 days a week. That hard work is what helped me develop what we have today. And I would recommend that to each and every investor, real estate agent, or any professional, whether in real estate or not. It's all a matter of hard work. I mean, look at Elon Musk, right? What is he doing? I mean, I was listening to an interview yesterday. I heard him say something to the effect of, he has a sleeping bag, and sometimes he sleeps in these factories, right? I mean, in a
Yep.
sleeping bag. Elon Musk, the richest man in the world, right? Like, it's all a matter of hard work, and that's you'll be able to reap the benefits at a later point. You may not see the strides that you're making and the moves and the developments that you're actually making in the short term, but long term, they're definitely going to come out, and you will be proud and happy of the fact that you did what you did at that time.
It's like what's it called? Like Mark Cuban said, like you rather work 80 hours a week for yourself rather than working 40 hours a week for someone else. That's part of it too. And
Absolutely.
when you look at like NBA, like Warriors and everything, you look at those guys, they practice like crazy. They do everything they can. They're there for hours a day practicing before even the game starts. But in sales and other businesses, I don't want to practice. I just want instant gratification. Why do I need to do anything?
And
What numbers are you
that's
talking about? You know?
That's the Instagram problem, right? That's the social media problem, because everyone is seeing the basketball players at the clubs. Everyone is seeing the basketball players, at the fancy restaurants, but no one is seeing the basketball players when they're practicing. Or same goes for the attorneys, right? I mean, I was in law school myself. I've seen attorneys, their hard work, their dedication, their sleepless nights, and many attorneys today that I know that I went to law school today, that I went to law school with. I mean, they're putting 100-hour weeks, right? But I guarantee you, in 5 or 10 years, they're going to be reaping the benefits then. And it's the same goes for the basketball players, the real estate agents, the attorneys, the doctors, whoever, whatever business you're in, whether you're cleaning toilets or you're this big honcho. It's all a matter of hard work and dedication.
Yeah, and that's tough because like I know a lot of people want to do a quick sprint and get there, but like this is a long marathon. It took you like 10 years to
Good
get to that
luck.
basic, 10, 15 years to be successful and be overnight success over 15 years, right? That's how it works.
Exactly.
But like you hear today, a lot of agents are joining the real estate business right now. It's like the number one time to be a real estate agent and to do sales and real estate because, hey, it's a lot of money. It's glamorous. I can just show houses and get paid a lot of money, or fix and flip and get paid. But it's not that simple.
Yeah.
It's a lot of work
No,
behind the
it's
scenes
not.
to really become
It's
successful.
not.
Yeah.
I heard a quote, something to the effect of the right time was always 5 years ago. Whatever time that 5 years ago was, it was always 5 years ago. So, 5 years from now, the right time was today. So don't waste time. Go out there and do it, and just just launch the companies, launch whatever it is that you want to do. Don't waste time.
Exactly. Execution is all about execution. So let's talk
Exactly.
about this. When you started doing your first deal, like you mentioned $6,000 and behind in rent, how did you get to do your first fix and flip? Like what steps did you take to get there?
Oh man. So the first thing that we did was we used to connect, sellers to investors and be able to create that wholesale fee, right? Be able to collect and make money that way. The investors were paying us, for that connection. The investors would be able to again, give us some piece of the pie. It took us, I want to say about three years, give or take, for us to be able to start buying real estate ourselves. At some point, we did end up buying a property in Bushwick. It was one of our first flips. It was a 3-unit property. We bought the property for right around $300,000. We put, give or take, about $500,000 into the renovation. So all in, it was right under, I would say, about $1 million after carrying costs, holding costs, and what have you. And then we ended up selling that property for $1.4 million. Look, that was a home run. It was an amazing deal. Those type of deals, they don't come around often. But if you're out there and you're grinding and you're putting in the time, you'll be able to see them. And there were some deals where, again, we made well over $400,000, or there were some deals where we only made $40,000. Not every deal is a home run. It's just a matter of you putting in the time and being able to go out there and look out for them, on a full-time basis.
And I think the hard part about that too is like for me, when I look at it, it's a lot of work up front to do it. But if you find the right deal, you can make a lot of money on it. And the part of it too is like executing. Like, yes, not every deal is going to be a home run, but if you can get base hits and you can keep doing that multiple times over and build the momentum, build a team, build a strategy, you gain the experience. So you're actually paying for experience. You hope you never lose, but you're going to keep growing, and over time the chunk can get bigger and bigger as you see the opportunity come along, right? But if you never start, you're never going to get there anyways.
But you also have to know, you have to have a network, right? I mean, I wouldn't be able to buy that property in Bushwick, Brooklyn, had it not been for my hard money lender at the time. Old school, older guy, in his 70s. He was driving in his Mercedes from house to house, taking a look at the property or giving you an offer as far as what they would finance at the outset. Don't get me wrong, he was expensive. We were paying at that time, I want to say, anywhere between 14 to 15% rate, and then anywhere between 2 to 4 points. And today my borrowers, when I'm telling them I'm locking them in at a rate of 7.99 or 8.5%, they're complaining, right? And I'm like, look, you don't understand what kind of rate you have, what terms you have, because when I was in your space and I was flipping, I was paying 15%, and I did not complain. I was grateful for it, because who cares what you're paying if you're going to make, 50,000 or 100,000 after that expense. So nevertheless, it's all a matter of your network as well. Again, I wouldn't be able to make my first flip, again, if I did not, wholesale, but also if I did not have that hard money lender at the time, who not only gave me the financing that I needed, but also gave me the advice that I needed to be able to flip the property. He made the connections for me. He told me what pitfalls to look out for, what to do, what not to do, what type of kitchen to build, what type of floors to put in. Because again, he's been around the block. And that's kind of what we carry with us as private lenders today. I'm forever thankful to him because he was able to help me build my net worth because he was able to finance our deals. But he also helped me by giving me the guidance that I need. And we here at WeLend, we carry that with us today because not only do we want to provide financing to our investors, but we also want to be able to guide them through the process.
And I think a part of that too is this: when you're starting to do fix and flips and you're really building your real estate business, you have to make many relationships and like talk to all the different lenders, all the hard money lenders, private money, all the residential lenders who are out there, and see what fits for you. But understand that each person has different products, different guidelines, different terms, and learn which one's best for you and which one you qualify for and which one you want to work with. And a lot of
Yeah.
good things about hard money loans and private lending is that you guys also provide experience, because like if the deal is bad, you think it's bad, you're giving them your opinion on why you might want to step away from this deal and versus another deal like, hey, that's a home run, go get it, and we'll help
Oh,
finance it.
absolutely, and that's the number one common mistake that I see from inexperienced investors. Right? They think that every deal is a home run, but once you put pen to paper and you throw it into a spreadsheet, or you use a calculator, however you do your business today. Although I still can't understand how some people do it just based on a calculator. I have spreadsheets for almost everything, but nevertheless, once you throw it into a spreadsheet, you realize that the deal is at a loss, or you're stand to make $10,000, but when you see only a $10,000 profit on a flip, if anything is to go to the left or to the right, I mean you're if the wind shifts you into any direction, I mean you're now at a loss. So you want to be careful, and I, as an investor, even if I didn't need the financing from a private lender and I had the liquidity to buy the property in full cash, I still reached out to my private lender just to get his point of view on it, just to be able to make sure that his attorney reviews the documents and the title and so on, just to make sure that at the end of the day, I don't have any pitfalls that I missed.
Yeah, it's always good to have another pair of eyes, especially if someone's willing to invest with you as a lender and look at these deals and say, hey, yeah, this makes sense, or
Exactly.
here's some things to think about before you go and do it. And it's up to you. But I think sometimes some private lenders can be on your team and they want to help you, because the thing is this: investors always want to flip, who keep doing more investments, then you're building a relationship together to do more deals together. And it helps make a win-win,
Exactly.
right? You can screw me once,
Exactly.
but that's it. I'm done. After that one, then can't move forward. But
Never
long-term
again.
relationships
Never
make
again.
you grow, right? You grow in a lot of long-term relationships. And then two is that when you're doing this, leveraging other people's money. So doing a loan, and the way I look at fix and flips is this: if your hard money loan calculation makes sense and it justifies inside your budget of what you're doing and the profitability of it, then the rate doesn't really matter, because it's X amount of time anyways.
Exactly. Exactly. I mean, look, most of our loans today, they get repaid within an 11-month period. So you're in and out of a deal, and some of our borrowers, especially here in New York, the experienced borrowers, they're in and out of a deal within 6 months, 2 months to renovate, 2 months to be able to find a buyer, 2 months for that buyer to get financing. 6 months in, you're in and out. So 8% rate really translates to what, 4% that you've paid for the deal. So at the end of the day, it's all a matter of trying to be in and out of the project as fast as you can.
Yeah.
Today, most of our loans are for a period of 12 months. They're bridge financing, but most loans are repaid within 11 months.
That's pretty nice too, because you're using other people's money, you're carrying it for X time period, and if the deal makes sense and your profitability is high and you have good margins on it, then it can work. And if it's
Yeah,
not, then you might reconsider that flip anyways, because if you're not making 50, 100, 200K or more, why bother?
exactly. Look, I mean, the power of leverage is exponential. I mean, and I don't say that as a private lender today, but I recommend that on every deal you look at it from a perspective of put some leverage on it, sprinkle some leverage to make sure that your ROI on that deal is fancy enough for you not only to be able to make a nice profit, but also attract other investors, in equity investors into your deal. So I always suggest sprinkling some leverage on it. Don't over leverage. You want to be conservative. You want to, if you have the liquidity, don't over leverage, but always sprinkle some leverage on it, because guess what? It juices up your returns.
Yeah, and the thing too, like if you're going to use 100% of your own money on a deal, how many deals can you do? Not that
One,
many.
two, three,
One, two, maybe,
max.
right?
Exactly, exactly.
But if you and act the activity of okay, if I started using private money, I did one flip and it's successful, and I started doing two, three, four, five, I can go to 10. Now this private money lender understands I'm in a business, I know how to do it, and then they're willing to leverage more and more money together, and we can do 10 at a time rather than one at a time.
Exactly.
That's a
Exactly.
part of it
And that
too.
was our strategy. That was our strategy. Look, I mean, if you're looking at deals and all you find are deals that are earning you 50,000, right,
Mhm.
on each deal. 50,000 is a great deal of money for many. For some, it's not really attractive enough. But if you're doing 10 of those on an annual basis, that's 500,000, right? Now
Mhm.
it's attractive enough. But the only way for you to do 10 of those, if you have enough liquidity, is either buying it in cash if you have enough liquidity, or through the help of a private lender by leveraging the liquidity that you have to be able to afford the 10 deals on an annual basis.
Exactly. So that's a part of it too. And then with that too, like, okay, they're starting to, people are starting to, okay, this makes sense. I can fix and flip. I got to run the numbers. It's good for me to double check my numbers anyways with the lender and look at the property and the value. Am I really on target? And you're learning those targets. And now you know your net profitability. You probably go through your first property one at a time in the beginning. But after you get a hang of it and you have the right crew, because not all construction crews are the same, quality, price, terms, timelines are by far different.
Oh
But then
man,
after,
I've heard so many horror stories with contractors. I mean, thank God we've always been lucky with ours because my brother was the really the person that handled that portion of it. He always has his own crew that handles the construction. But I've heard horror stories about contractors. I mean, I've seen scenarios where contractors got a deposit of 15, 20,000, just boom, disappeared.
yeah.
So definitely be careful with that part too.
Let's get some tips on that. How do you identify the right contractor and the wrong contractor, and how do you make it? How do you kind of have create some safe zones so that this doesn't happen?
Look, I mean, I got to tell you one thing: referrals, right? You want to know someone has done the work for someone else in the past, and they've done a good job. In addition to that, you don't want a contractor who doesn't really have any pending projects, right? So when you're interviewing them, you want to ask them, hey, do you have any pending projects? Go out there and take a look at their work. But when you go out there to take a look at their work, make sure that it's their work, right? So ask the people that are working there, like, hey, who's the GC here? Who's the man in charge? If they don't say that it's, John Smith as by way of example, and that's the contractor that you're speaking to, then he just sent you to someone else's job, right? So always be careful. You want to vet them out by making sure that they're referred over to you. You want to vet them out by making sure that you know that they have pending projects. You want to see the type of quality work that they've done. But also, if you can't find any of those two or three, what I recommend is going to Home Depot at 6 or 7 o'clock in the morning. When you find those guys standing there at 6 or 7 o'clock in the morning, not everyone can do that, right? Wake up at 6, 7 o'clock in the morning and stand in front of Home Depot to be able to get a job. You would be shocked as to what type of quality you can find there from time to time. So the person that's there at 6 or 7 o'clock in the morning is usually a guy that's a hardworking individual that's just looking to put bread on on the table for the family, and they're usually very good at what they do. So that's another recommendation that I would make is going out to Home Depot or Lowe's as an example, and early in the morning, not in the middle of the day, to find yourself that one guy that's there looking for work.
Yeah. And I think, yeah, finding referrals is really one of the best points, and taking a look at their work is really good. For me, like since I've been doing this for so long, I actually look at the quality of the work. Like I go in, I look at projects they're doing, I look at the quality, like look at how they install the kitchen cabinets, look at how they install the tiles. Are the
Absolutely.
screws all in the right place? Is it set up nicely? Is it actually measured out? You can tell they're 16 inches apart from stud to stud. You can tell the tiles actually straight. They're using lasers, they're not using eye level and it's flat, or however you designed it. How's the cabinetry? Do the doors hit each other when they open the doors? That's one way, right? For the kitchens, bathrooms, you can tell the same thing. Look at the tiles, look at the grout lines, look at everything. How's it cut,
It's
right?
all about quality, right?
Yeah.
Because look, at the end of the day, when you're selling your property, the buyer, the end user is going to look at the quality because that's what they're buying, right? You just added, potentially a significant amount of value on a property, and when they're paying for that, they want to make sure that it's quality. So yeah, Matthew, I mean, you hit it right in the head. You want to make sure that not only that they're doing the work, but they're actually doing good work.
Yeah, and each contractor is different too. The way they do it, like when I interview contractors, I see the differences. If I ask you how to do something and you can't explain exactly step by step how to do it, then I understand like there's certain things you gotta be watch out for right off the bat. And the reason I say that is actually done a lot of the work myself, like from ground up. I did a lot of the work, so I understand how they're doing it, but that's through experience over time. And the next thing too is like ask them for a quote for your project. Like you should be as a flipper understanding your project, the scope of the project, listing out everything you need to do, having them
Yeah.
actually calculate and give you pricing on it. And if they can't give you pricing or they give you bogus pricing, then you can kind of see how they're going to work with you. Like, okay, this is a
There,
BS dollar just to overcompensate for what I think you're going to do and change on me, right?
you want itemized line by line as to what they're doing, what the cost is for it,
Mhm.
because if they can't provide that for you,
Mhm.
then they're most likely fly by night type of guys, right? So you want to be careful with that. You want to make sure they're able to provide, the cost and how they're applying that cost, not just like, oh, well, this will cost you 50,000. All right, well, how are you actually using that 50,000? Where is it going? Give me an itemized list of how that's being applied.
I don't have time for that. You want it or not, right? And I get it. Contractors are busy, but like when I see a line item that says one line total price and there's no breakdown, and your contract looks really bad, I'm just gonna walk away because that's a red
Exactly.
flag for me, right?
Exactly. And avoid the contractors that want, the 50% deposit right from the start, right?
Yep.
There's no
Mhm.
reason for it. Yeah, there's a reason to give them some kind of deposit
Mhm.
just for them to start, getting the labor in there. But there's no reason why they need a 50% deposit. No way.
Yeah, there isn't, and you'll see over time. And then the good thing is too, like okay, on your first deal, don't do multiple deals at the beginning. Do one deal. Find the right contractor, interview them, spend the time. Yes, you're taking more time than normal, but you should start interviewing them before you even buy your first house. And see who's willing to give you time. If they're not willing to give you time, you already know it's going to be harder to work with, anyways.
You got to crawl before you walk. You got to walk before you run. Huge
Yeah.
believer in that here. You don't want to take on more projects than you can actually handle. I've seen that happen a lot, right? Where everything just goes bust. So, start slow, start small, build up your crew, build up your team, build up your network. And then, once you feel like you've have, a hand on it, that's when you go out there and you actually start handling 5 or 10 projects on a monthly basis. But when we started slow.
That's hard though because everyone wants instant gratification. I just want to be a fix and flipper right now. I want to get paid today. I don't want to wait. But if you don't wait, you're taking the risk right now on the first property with your
Absolutely.
investor right now, and you're going to run into all the issues that we talk about because you didn't prepare ahead of time.
Very likely to go bust if you try, too many projects at one time. Very likely. Because
Mhm.
look, you don't even realize how many pitfalls there are, right? I mean, you got to be careful. You just got to be careful.
Yeah, and you have to you also have to overestimate too. Like whatever project you think you're going to spend, add another 15 to 25% on top of that because something's going to happen in between it that you don't know about.
It's inevitable. It's
Yeah.
inevitable. And not only that, I mean, sometimes you're the one that's making it happen, right? Because
Yeah.
you wanted to put a $10,000 kitchen, all of a sudden now it's a $15,000 kitchen. You wanted to
Yep.
put a bathroom for 5,000, now all of a sudden it's 6 or 7,000. And those small little add-ons, and they happen all the time, right? I mean, they
Yeah.
happen all the time. Those small little add-ons, they catch up. So yeah, you think you're going to spend X amount, you end up spending a lot more than that. Once you're at the finish line.
Exactly. And you mentioned bathroom for 5,000, and for me, like, damn, I wish because in the Bay Area now, the minimum starting price is 15,000 to 25,000. Depending on what you're doing.
You
And like,
know, things have jumped up exponentially.
yeah,
We've just bought a few projects in New Jersey, and we're experienced investors. We made that same mistake that I'm telling people to avoid, right? Because we didn't realize how much everything, the supplies have increased. I mean, yeah, you can't find a $5,000 kitchen anymore.
mhm,
It depends on what you're building and where you're building and who you're building for. If you're building to flip, yeah, you can't manage a $5,000 kitchen, a bathroom rather. But if you're looking to hold and rent, possibly, right? It depends on what kind of finishes you're putting into it. So, but yeah, nowadays with today's market and the cost of supply and the shortages around, I mean, it definitely has gone up.
so that's the hard part too right now with COVID, everything that happened the last 2 years and the timing. Contractors are all busy. A lot of workers don't want to work and do construction anymore. Materials are super expensive, hard to get. really rare. I actually see contractors and work owners, flippers are actually buying stuff off Facebook Marketplace. They're buying all the materials, whatever they can get their hands on to do the jobs. I'm like, wow, okay, that makes, I guess, because there's actually some good quantity out there, and it makes
I built
sense.
my gym at home from Facebook Marketplace, but I didn't think about building a house from Facebook Marketplace.
Yeah, like, hey, you can buy drywall. Hey, buy 2x4s. Hey, buy plywood. I'm like, oh, okay, and buy
I love it.
appliances, and like,
I love it.
so it's like, oh, I see that can work too. And if whatever you need to get done because you don't want to wait,
Yeah.
but know the fact that everything you're doing takes way longer than you think it does right now, and it's tougher. Like permitting time took forever too, right?
Yeah.
So
Yeah,
that's
I mean,
part of it
permitting
too.
time here in New York is just infamous to take long, right? DOB inspections. I mean, good luck, right? Evictions, good luck. I mean, timing on everything is just everything has just been dragged out,
So
especially
what do
in
you
New
think about
York.
that? So how does that work too? Like if I'm gonna buy a fix and flip right now and I need lending on it, how does that gonna work for me and my numbers? Because if I'm having to deal with permitting, waiting time, and material
Yeah.
time, it's just eating everything away.
It is, and that's why I tell every single one of my investors, yeah, you might think that you're in and out of a project within 6 months, but when you're actually analyzing the deal and you have the spreadsheet open, analyze it from a perspective of 12 months. Is the deal still profitable within 12 months? And if it is, great. If it isn't, reconsider. Maybe go back out there and speak to the seller, speak to the real estate agent, show them the spreadsheet, and I'm happy to share it with you. Show them the spreadsheet, show them what you're looking at, where your profits are. Are you in the red? Are you in the black? I mean, you really want to have those conversations because realtors themselves sometimes they might say, oh, this deal is a home run, and especially if they see that you're a new investor, they'll tell you the deal is a home run. But once you show them a spreadsheet that you've broken it down and that you're not as inexperienced as they expected or thought you were, the sale price or the asking price, you'll see it declining very quickly. It's easier to negotiate with them.
Yeah, exactly. And I think too, as a fix and flipper, you want to talk to real estate agents who are experienced in it, who have done their own investments, their own fix and flips, or really understand what you're doing. If the numbers make sense, great. If numbers don't make sense, move on. But at least have a good understanding of who you're working with so that they can help you. Like I'm a real estate investor and an agent myself, but I help investor clients because I show them here's the analytics behind it. Here's how you do it.
Yeah.
Here's my experience. Here's even my crews. Like I run multiple crews and they do the jobs for my clients. I'm like, this is how it works. But of course, you have to understand the risk and time. And if you can afford it, there's some good money to be made.
Absolutely. Look, I mean, as a real estate agent, it's in your benefit for the deal to work out for your buyer, your client, because as successful as he is, because of that, he's going to start buying more deals from you in the future. So, yeah, it's in your interest to be able to introduce him to the crew. And same thing here, right? It's in our interest to make sure that our borrowers succeed, not only from purposes of future business, but making sure that our loan is repaid, making sure that we don't lose a dime of any of the money that we've lent out. I mean, thankfully, and with God's blessing, I mean, we've to this day have a $0 principal loss, right? We have yet to lose a penny,
Nice.
thankfully. And at the end of the day, that we strive to make sure that never happens.
Yeah, I think, a part of that too is like you really want to find your core four, right? Like your real estate agent, investor agent, your lenders, your private money, residential lenders for future deals, and your contractor, your manager, whatever you need to build up your flow, right?
Yeah, absolutely.
Yeah, and everyone's looking together. So let's talk about lending too. So how does the private money lending work, and what things do flippers need to go through to get the money?
I mean, we need a lot less than say a traditional or portfolio, lender, right? We are private lenders. It's also known as alternative lending, also known as asset-based lending, and so on. I mean, essentially what that means is that when we are lending you, the borrower, the funds, we're not looking at you as the borrower as much as we are looking at the asset that we're lending, hence asset-based lenders, right? We're looking more on the asset to make sure that the asset or the deal that you're buying, there's meat on the bone. It's profitable. We're looking at the location. We're looking at, the condition. We're looking at whether it's vacant or not. We're looking at what the scope of work looks like. I mean, there's a number of things that we're analyzing when we're looking at the asset. But aside from that, we're also looking at you from a perspective of your experience and your FICO score, right? If the borrower doesn't have any income because he's a full-time investor, that's okay with us, because that actually is better for us, because we know that he is experienced, he knows what he's doing. Today, luckily, 89% of our borrowers are experienced investors. We love that, because the chances are of that loan defaulting is slim. But essentially, what we're looking at is the asset. I would say good 80% of our underwriting is looking at the asset versus the investor, and then the other 20% is the investor experience and FICO. 620 FICO for us is excellent credit. Although today the average FICO score for us is about 693. We do not require tax returns. We don't require bank statements. We don't really care about the property condition. For example, some properties that we've lent on, they're missing a roof, they're missing a wall. I mean, they've been burnt down to the ground, and that's okay with us. Whereas a conservative, rather a conventional lender, they would never lend on that, right? Because the asset itself is not mortgageable. For us, that's kind of where our business is and our focus is today.
So the difference too for those out there, the difference is like on a residential loan. You need to get appraisal. You need to have a house that's habitable. You need to qualify for the loan and whatever percent down payment to qualify. And they're basically
Yeah,
selling that loan to Fannie, Freddie Mac. So that's why you have to do all these things. And you need tax returns and income and good credit. So
yeah,
the difference
yeah,
between that and private money is that private money, you don't deal with all that. You're dealing with asset base, which is similar, really similar to commercial property. You deal with the property first, and you run all the numbers on the property, analyze the property, and then it comes to you. Are you capable as a investor to do the work that you need to
exactly.
qualify on that route, regardless of your credit score so much and your income and what you're putting into it? That's
Yeah,
the difference between
yeah.
regular loans, conventional loans.
Yeah, yeah,
So
exactly. I mean, look, like I said, most of our borrowers don't have a full-time job. They're not W-2 employees. All they do is real estate investing, or they might be real estate agents. They don't have consistent tax returns, so as a result, they may not qualify for a conventional loan. Whereas with us, they are a perfect fit.
And how is that process? 'Cause some people ask too, oh, can't I just get a regular loan and get a construction loan on that regular loan versus going to a private money? Won't that be cheaper?
For a conventional loan,
Mhm.
absolutely, absolutely. Conventional loans are cheaper, although today's market they're not, right? I mean, if you look at today's market, I think speaking to a friend of mine who's a conventional lender, I mean, he's lending at right around 5.5 to 6.5%.
Mhm.
That's where he's locking in his rates. Today our rates on our bridge loan, which are the 12-month loans, are right around 7.99. Although I expect that to be increasing very soon. But at this point, it is at 7.99. So it's not too far apart from your conventional lender. But look, it's not even a matter of cost. A lot of times it's a matter of qualifying, right? Our borrowers, many of them are not mortgageable for all the reasons I've mentioned, or the property itself is not mortgageable, or the borrower just doesn't have the time to waste with a conventional lender, right? A
Yep,
lot
you
of
won't get the deal.
times the exactly. I mean, the seller wants to be in and out. They're telling you, hey, look, if you're cash close and you can close within 7 business days, the deal is yours, and we'll discount it by 20, 30,000 because of that. So many of our investors are coming to us because of our speed to close. But also, many of our deals today are coming from the foreclosure auctions. You can't get a conventional loan on a property that you just want to bid on a foreclosure auction, because you can't even get into the property for an appraisal, which is one of the qualifications with a conventional lender. Now, we do want to do an appraisal on every single property, but we don't have to go into the property. We can actually do a drive-by appraisal as well.
And I think at the end of the day, what it comes down to is qualifying for the property, qualifying yourself, and doing it with a timeline that makes sense. And as long as the rates and the numbers make sense on the property you're doing as an investor, it really doesn't matter. But the goal is really saving time, finding the deal, getting it to work with the seller, negotiating the best price you can get for it with the lending included in mind. And if the numbers work for you, take a stab at it. And it's good to have experience. It's good to have mentorship and people who have done it already, so you don't miss out on the pitfalls of going through it. But after you build the momentum and get going, remember, how long are you carrying it? Let's say 12 months. Okay, what's the cost of 12 months to carry it? And how much profit are you really
Right.
making? If it makes sense
Right.
and the risk is with you can go for it, right? But I
Absolutely.
think people get stuck on
Absolutely.
it
You're
too.
right
Like,
ahead.
but people get stuck on the idea, oh, private money is expensive and I don't want to bother. I don't really want to research it. But then they end up not doing any deal because they're just over analyzing. And even if they try, oh, the conventional didn't qualify anyways.
Right, right, exactly. And or they just don't have the time, right? The conventional
Mhm.
lenders telling them, look, you need at least 60 days for me to be able to coordinate a loan for you, and they don't have that time.
Yeah,
So yeah, you hit it right in
and
the
it's
head. I mean,
tough.
it's not a matter of yeah, it's not a matter of the cost. It's a matter of qualification. It's a matter of execution. With a private lender, the certainty of closing is a lot higher than with a conventional lender. Now, not to knock down a conventional lender, because we get a lot of business today from mortgage brokers and what have you.
Mhm.
But we're on two sides of different spectrums here. And a conventional lender definitely complements a private lender and vice versa. But we just focus on different type of clientele and borrowers and different type of assets and the conditions of those assets.
Yeah, I think to go with that too is like, yeah, really, for example, let's say that's you're a fix and flipper and then you decide you want to keep the property. You can always do this too. Borrow a hard money loan, use the money, fix the house up, make it qualifiable, and you want to move into it, you move into it, and then you refinance with a regular conventional loan at a better rate. But in the beginning,
So
you paid X amount, and at the next part when you refinanced it, you paid X amount. So you take what does it call? You just blend the rates and you understand here's what you got overall, and it was a
yeah,
better deal.
yeah.
So
Look, I
that's
mean, you,
another.
you made actually a very good point. The
Mhm.
other difference about a private loan is the fact that this is a business purpose loan, which means that we only lend to investors on their investments. If you have, the intent or the idea of moving into the property and we find out about that, we're not going to
Mhm.
lend on a loan, right? So essentially it has to go, we're lending to an entity, and behind it is the principal who has to have the, somewhat of experience or the credit or what have you, but we're essentially lending to an entity, which is a business in this situation, and the business itself is the fixing and flipping. And many of
Mhm.
our borrowers today, like you said, look, they're buying properties, they're repositioning them, they're fixing them up, they're evicting the tenants, the squatters, what have you. They're renting it out to a good tenant. They're producing income. Again, they reposition that asset, and then they're ultimately refinancing into a 30-year loan.
Mhm.
That's not as common as it used to be, say, 3 or 4 months ago, due to all the rate hikes. But essentially, I mean, a lot of our borrowers, they're doing exactly that, right? They're using us for the bridge, for the acquisition, for the construction. And then they're also, going into a 30-year DSCR loan where they're able to qualify for a 30-year loan with fixed terms.
Yeah, and that works too. And it's all like you mentioned, it's all about business and numbers and what makes sense for them. And there are people who using that money for Airbnbs, for other investment types, long term rentals, and if you can get that and get good returns, net income from the rentals, then that can work as well. But it's just the idea of
Exactly.
how do you utilize different kinds of money, different sources of money, how do you make it work, and what's the best for you at that time for that property and
Yeah.
understanding
Yeah.
all of this together. And it's a lot of work, but the more you can learn about it from people who are experienced in doing it, the faster you can get to where you want to be.
Look, it's all a matter of making sure that you have the right mentors and you're listening to the right podcasts. Look, I'll be honest with you. I was listening to your podcast last night, and I wish podcasts existed like yours when I started fixing and flipping, because I feel like, with podcasts as valuable as yours, I would have been 10 years ahead. So, it's all a matter of making sure that you're reading the right books, you're listening to the right podcasts, and you have the right mentors by your side.
Yeah, great. And I really appreciate that too, because the real value is like really just trying to educate everyone on the different options. You can learn from all these different podcasts, the people
Yeah,
out there speaking like you, Ruben, right? It's like you're giving them guidance on how to choose a better hard money loan, private loan, how to find the right deal, how to make it work, and understanding the differences. And not all private money is the same type. Even for you too, like I'm sure your company stands out from others, and like the value you guys provide, the expertise you guys provide, the rates you provide are different from everyone else's. Everyone has different options,
absolutely.
but if the consumer investor is not aware of it, then that's kind of like how we're trying to help them become more aware, ask more
Absolutely.
questions, find the right people.
Look, for
What's
us
some
here,
of the
it's all
things
about
that you would ask? What would you tell investors right now if you're looking for private money? What 5 questions should they ask a private lender?
Well, first thing is there's some private lenders out there who are asking for a upfront deposit from the borrower. You want to avoid that, right? You want to find out that they don't have any upfront deposits, any upfront fees, because at the end of the day, once you pay an upfront fee, they locked you in, right? Or it's possible that they'll just disappear on you. I mean, I've seen that happen. You also want to find out what their FICO score requirements, right? Do you qualify from that perspective? If the property is inaccessible, you want to find out if their appraiser must gain access into the property. You also want to find out, what are the leverages? Here at WeLend, we finance up to 90% of their acquisition price and 100% of their construction cost. You want to find out what leverages you qualify for. Not every single borrower of ours qualifies for 90%. It all really depends on their experience. If they're inexperienced, we can't offer them 90% because there's more risk with an inexperienced borrower than there is with an experienced borrower. So, you want to find out what leverages they're offering. You also want to find out whether, do your own due diligence as far as whether that makes sense for you. Can you actually afford, 20% down or 25% down, and then, the construction itself. So those are some of the questions that I would ask. You would also want to check out their social media. Highly recommend that because look, there's a lot of fly-by-night, guys out there that are offering you, amazing terms. They could offer you a 6% rate with a, upfront deposit of $5,000, and all of a sudden they just stopped answering the phone on you. So you want to check out their social media. You want to make sure that they actually have a true company. It's a true lending company. We here at WeLend, between all of our social media platforms, we have, I think, about 30,000 followers. So you want to make sure that you're dealing with the right company. You want to make sure that their terms fit your expectations and your ability to afford the deal.
Yeah, I think that's a really great question. So everyone out there, you should really put these questions down on paper and look at it and compare side by side. Like compare all those details and make sure that these same private lenders are providing you this information. And then take a look
Yeah.
at it. And it's not only just the rate, the terms, but making sure you're the right fit for them, they're the right fit for you, and that you can build a relationship over time to build sustainability. The hard thing is if you keep switching different lenders and you're doing all those different kinds of things, you're wasting time as well. But try to find someone you can partner with and make a good relationship to do these projects.
I always recommend my investors to have one or two private lenders, right? Maybe
Mhm.
three. And the reason why is because you never know. Look, there's some deals that we won't touch for whatever reason because we just feel like it's too high risk. The property's not in the best locations or whatever the case may be. You always want to have a second one just in case. So always, expand your horizons. Make sure that you have other outlets just in case if something was to go wrong.
Yeah, exactly. And another final question I have for you too. What do you think about the current and future state of the market right now with the interest rates rising right now?
Look, employment is strong, right? I think we're at the lowest unemployment rate in decades. Employment is strong. Housing looks even stronger. People today are rushing to buy houses because everyone is sitting on a lot of liquidity. If you look at the shortages of housing, it's huge. My only concerns that I have is, obviously the rate hikes. What kind of damper are they going to put onto the economy? I think today S&P 500 had its lowest or highest decline since June of 2020, from what I remember. Also the war with Ukraine and Russia. How involved are we going to get? How bad is that going to get? Is it going to get any worse? Hopefully by it will end soon, but who's to say that it will, and how far will it go? So those are the current concerns that I have. But from putting that aside, housing is strong. The unemployment rates are at an all-time low. Yes, there is an issue with shortages of supply. But if the lockdowns continue, that will probably get even bigger. But hopefully the lockdowns won't happen again, and hopefully we'll be able to reinstate our supply chains. So I would say bullish on the next 2 years or so on the real estate climate.
Yeah, and for me, like in the San Francisco market, I still think that it's really strong. It's really good opportunity out there. It's harder opportunity, and I think the thing to consider is timing, understanding what you're getting into, and really understanding timing, and having a good solid crew that's not going to delay you, and knowing how to run your numbers, knowing how to do the project from start to finish. That's where the expertise matters. Like for me, I know, okay, I need architects upfront. I need my permitting fast. I need to order my windows fast. My plans is quick. I know there's delays in other factors, but if I can plan all these delays even before I start the project, I know where I'm going to be at the end of the project. But if you're not
Exactly.
experienced, you run into these issues. Oh, I ordered Windows 4 months after being in the project. Oh, it's going to take another 4 months. That's 8 months now. You should order from day one. Not all contractors will tell you that because contractors are busy. So know how to GM your own projects really well.
Absolutely. I would add to that by saying, look, your strategy might be to fix and flip, right? But you also got to analyze the deal from a perspective of a buy and hold, right?
Mhm.
If in the event you can't flip the property for whatever reason, is the property's income going to be sufficient enough to carry and service the debt that you're going to have on it at a later point? So, yeah, definitely make sure that you're ordering the supplies in time, that you're dealing with the right contractors, that you're dealing with the right private lenders, but also look at it from a perspective of, look, we don't know what's going to happen in the next year or two with the current economic climate. So be sure that you are ready to hold on to that property, and whatever income that it could generate is going to be sufficient enough to cover your future debt.
Yeah, so have plan A, plan B, and a plan C, and then hopefully plan A works really well, and you'll see. But that's where experience comes in, and you'll see what happens with your crew, your team, and then how
Exactly.
you make it better for next time. Cool. Thank you
Exactly.
so much for the great podcast today. How can people reach out to you?
Matthew, I appreciate all that you've done. I appreciate the insight. Great questions. I hope to be on the podcast very soon again. But anyone can reach out to us by visiting our website www.relendllc.com. They could also visit us on any of our social media platforms. We're even on TikTok, Instagram, LinkedIn. There's a number of platforms that we're on, Facebook and so on, and our handle is @WeLendLLC. They can also email me directly at ruben@welendllc.com.
Cool. Thank you so much. Thank you, everyone, for being on the Truth About Real Estate podcast, and we'll see you guys in the next one. Have a great day.